will be popping in to share some of his magic with us, hopefully, if he remembers. Hope you're doing very well. Let's crack on through all the headlines and data and whatnot while we wait for Gregor to join us. China. I said there's going to be lots of comments around the Taiwan situation. China has urged the US not to support Taiwan independence before the election this weekend. They don't want the US influencing or seemingly influencing what's going on in Taiwan. We still know that it's likely that independence-led parties are going to continue to govern there, which no doubt will bring a reaction from China after those elections, but let's see what goes on. On the other front, US and Chinese military bods have had their first talks since 2021. So a bit of another sign that China might be easing up on its tensions with the West. Chinese President Xi spoke earlier this morning saying he looks to seek a stable and healthy and sustainable ties and relations with the US. So again, we're just getting a bit of this conciliatory rhetoric out of China towards the US. No surprise, this is all happening while their economy is under the cosh. Chinese stocks got hammered again overnight. Just show you that quickly on the chart. If I can find it, there we go. Not looking too good, as you can see from stocks there. The wider picture, go on to a daily. Not looking bullish at all. Very bearish on the stocks, hitting new lows, fresh lows, multi-year lows. So not going well over in China at the moment, hence why they might start getting a bit more friendly to some of their trading partners. Over in Japan, we had some data, or a bit of data out across the board last night. In Japan, we had some wage numbers out, income numbers, pay numbers coming out. Coming in a bit softer, overall wage income for November coming in at 0.2% versus 1.5% expected and previous. The BOJ and the government won't want to see these numbers falling back too far. And then because it just gives or leaves more of a mountain to climb when we get those wage negotiations coming into the spring. Over in, meanwhile, I'll stay in Japan, and talking of stocks, it's the polar opposite for the Nikkei. I'll get rid of that for now. As you can see there, making a fairly significant breakout in Japanese stocks. That's partly one of the reasons why, or maybe the reason why, we're seeing dollar yen pushing up today. I'll explain that a bit later, but Japanese stocks certainly moving on up and looking very bullish. Australia, they had their CPI number out there, November year-on-year weighted mean CPI coming in a little softer than expected, 4.3%, and a bigger drop from the 4.9% previously. So that will keep the RBA on hold, no doubt. Norway as well saw some inflation data too, and again coming in softer as well. That's going to have these lots sitting on their hands, maybe even starting to think about turning the other way. 5.5% on their core, lower than the 5.6 expected and 5.8 previously. Headline CPI coming in unchanged, 4.8%, but that core number is all important, as we know from the various central banks like to play the accounting smoke and mirrors and talk about the core when it's relevant, and they ignore it when it's not. So that's going to keep, as I said, the Norges on the hand-sitting front. We've had a few auctions out. A lot of people looking at the US auctions, but as Dale mentioned on F.A.C.E yesterday, we had a good UK auction. I read up a bit more about that. It was a record for this auction and heavy demand seen. It was oversubscribed 3.6 times for that. That's generally the theme that we're seeing across bond sales in general, because European bond sales, they beat 43 billion in a record-breaking day yesterday. So there's a lot of appetite for bonds at the moment. Said to be demand of locking in those higher yields before all these rate cuts come to pass. Looks like it's the New Year theme at the moment. The US 3-year auction that went through very much okay yesterday. No problems cited from that. Let's see if it's on here. Boom, 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 boom. No, I'm in the wrong day. That might help if I go to the right day. So coming in at a much lower yield, decent bid to cover. Nothing amazing. Nothing totally untoward in the auction as well. So, as I said, it's a good, healthy demand for notes coming into the new year. We'll see if that lasts or whether it dissipates. Back to some of the data this morning. We got some obviously numbers out there from Sweden. GDP coming in at 0.2%. Some confidence numbers there, household confidence numbers there coming in softer. Industrial production coming in softer. So new orders though picking up their year on year. Retail sales coming in softer. So not looking too good over in Sweden on the economic front at the moment. Italy retail sales as well, that came in okay. France industrial production came in okay. There are problems in Germany. I'm seeing more and more headlines popping up about things going on there. They've been hit at the moment by 3-day train driver strikes. I'll tell you, this country is sounding more and more like the UK at the moment. They're facing 3 days of train driver strikes. They've also got protests by farmers because of cuts to subsidies, which is all part of the tightening of the belt regarding the budget and all that pandemic spending, court case and everything. So there's a lot, you could probably call it a bit of austerity seeping into Germany, and it's not going down too well. So that's rail strikes, drivers demanding high pay, farmers protesting at cut subsidies, and the German Engineering Association, VDMA, says there's no sign of a turnaround in German engineering orders in November, according to their surveys. So things are looking particularly bad in what's classed as the growth engine of Europe. It seems like the engine's fallen out of the car, and they need to call the breakdown recovery people. ECB's De Guindos says a technical recession is possible in the second half of 2024. On the cut front, BNP say that the ECB is likely to cut rates before the Fed, possibly March or April, as they see the Eurozone economy weaker than the US, which is a fairly reasonable point. It does look like economic weakness is hitting the Eurozone more than the US. However, it's not, you can't really compare it entirely. It's a bit of an apples and oranges when you're talking about rates, because remember, the Fed is up in the 5% and the ECB is only in the 4%. So there's a bit of a gap there, which may allow the ECB not to cut as fast as the Fed. The Fed having higher rates might be more susceptible to a swifter downturn than the Eurozone. But who knows what's going on with the thinking at those guys. But you have to look at the rate divergence when gauging who's going to be cutting first, who needs to come down faster or get back to neutral faster. It could still be the US, but the data will tell us all. Small businesses in the US are a little bit more optimistic. We had the NFIB data out yesterday, just a small number I'll keep half an eye on. That came in, if I can find it, that came in at 91.9 versus 90.7 expected and 90.6 prior. So the small business index looking a bit more positive over there. Mexico CPI got the sticky label on it. CPI headline 4.66 from 4.55 expected, up from 4.32 previously. The core, it says month core, but it's actually a year-on-year number, 5.15%. Was expected, came in at 5.09%. So that one was a little bit down, but headline up. So these numbers are still high numbers, still showing stickiness for Mexico there. On the geopolitical front, apparently the G7 and Ukraine held some secret meetings with some southern nations in December to discuss advancing the Ukraine's peace plan. That was a headline that dropped. So maybe there's some talks going on about finally putting an end to this war. China came out a bit later after that to say that the Russians showed enthusiasm on Ukraine peace talks. Now, both sides have their own versions of a peace plan, which are still worlds apart. But let's see, hopefully something may come together this year to put an end to what's going on over there. BlackRock is not going all that well amongst asset managers, as they are looking to cut 600 staff. So for all their calls and all their money making, they are facing cutting costs the same as everyone else. In oil, we spoke about traders having a big old bet in bonds the other day. Well, there's been a big options bet in oil. Basically, a call spread put on between 110 and 130. So it needs the price to rally above 110 to make money, but that's gone on recently. Most of those options expiring in March and June, so a bit of time to play for that one, but it's betting on a bullish oil market. We had fun and games yesterday in Bitcoin. Well, you called it fun and games, I called it an absolute farce. Late last night, a tweet dropped from the SEC saying that approval had been granted for the Bitcoin ETFs or crypto ETFs. That saw an initial rally. I'll get the old short-term chart up. Then that was denied by the SEC, with Secretary Gensler saying that their Twitter account, this is the SEC government Twitter account, was compromised, and that tweet was sent out confirming that it was approved, when in fact they had issued no such approval. So again, another big move in Bitcoin. Lots of laughs going on this morning and lots of questions over the SEC. Twitter itself came out to say that one of the reasons why that happened is that they didn't have 2FA initiated on their Twitter account. So they need to tighten that up. Lots of people saying if they can't trust them, the SEC, to use their Twitter account or keep their Twitter account secure, how are they going to keep investors secure? So, yeah, that was fun and games late last night. Much mirth going on. I don't know where it leaves the buy the rumour, sell the fact trade over this approval. I guess we're going to have to do it all over again. But, yeah, bit of a shit show that was over there. I see Greg is in the house. I'll bring you in a moment, Gregor, once we finish off this and had a look at a couple of prices. Let me see. Where are we? I might have to approve you. Give me 1 second, mate. I have to go and find him and approve him. There he is. Promote to panelist. Right, you should be there, Gregor, if you accept that. I've just promoted you to panelist. There we go. Right, so just before Gregor comes into play, just going to have a look at a few bits and pieces. Now, I mentioned that the Nikkei was making new highs. That has helped drag up dollar yen through 145 initially overnight. Now, this is one of those times when you can see the distinct correlation between yen pairs and the Nikkei stock market. So we often speak about, what are drivers of a market? If dollar yen's rising, why is it rising? Is it the dollar? Is it the yen? Is it yields? Is it this? Is it that? Well, this time it's purely the stock market, because US yields are still looking a bit soft, heading back below 4%. And at that time, dollar yen was rallying, which is, again, not something you often see together. So you have to look at what is driving it. So that shows you, it gives you a good example of what can happen when you trade in Asian hours, and dollar yen can follow, or yen can follow, what the affairs of the stock market. The reason being is that it's both good for exporters. The level of the FX makes it good for exporters. Exporters listed on the stock markets, it means it's good for them. So it's a bit of a hand-in-hand correlation on that one. So if stocks rise, it can lead dollar yen to rise as well. As I noted this morning, just looking at the short term, we failed to make a hold above 145. This is still my key level. At the moment, we're failing to make a break and hold a break above that. We peaked out pretty much when stocks closed. So that meant that yen pairs needed some other forces to continue it higher. And if that wasn't coming, then we're going to switch back to the other side of the trade, which is the US coming to town. So we switch focus from yen to the dollar. So I'm not surprised to see us edging lower. We're not coming down too far, but now the forces that were driving it higher have stopped. Now it needs to hold itself up on something else, and that means going back to trading the dollar and probably following yields. So that's going to be the focus, as I say, as we enter into the US session, and then we become more dollar specific on the trading. Not a lot else going on as well. Ratio asked about Aussie dollar. Why didn't it sell off on that CPI number? Okay, the CPI number wasn't huge in terms, it was expected. It came in lower than expectations by a pip, so a bit of a surprise there, but it was expected to pull back. We've still got inflation well above target. We're still got a 4 handle on the CPI numbers. So that's one reason why it hasn't sold off significantly. The other reason is we've probably got a little bit of a drag from the yen crosses because they were, as I said, they were up across the board. Pretty much all yen pairs were seeing fresh session highs or fresh days highs. So that's been a bit of a drag as well on the majors, keeping the majors afloat. But you have to also look at the variation between the data. A 1 point miss of expectations doesn't mean Aussie dollar is going to collapse 200 pips. Look at it in the context. Inflation's still above 4%. It's still hot. It's still sticky. So if you start seeing inflation falling under 3%, well, then you're probably going to see cut bets ramping up, like we had for the Fed. Even though inflation there hasn't fallen through below 3%. And in fact, that was a conversation we had in the room about expectations for the Fed and the CPI that's coming up. I think you could probably use the 3% mark as a bit of a pivot for whether cut expectations increase or decrease or stay where they are. If inflation stays above 3%, even if it comes down to 3.1%, if the core comes down to 3.1%, be it now in the months ahead, on a longer term basis, if inflation remains above 3% level, it's going to keep the Fed on the hawkish front. It's going to keep them in the higher for longer mode. If we start to see inflation coming under 3% with a 2 handle, then you're going to see the real possibility of Fed cuts picking up, because then they'll be thinking, right, we're on our way to target, which is obviously 2%. So this 3% line going forward, looking at things with a bit more longer term outlook, your 3% is probably your decent pivot level to keep an eye on for gauging what's really going to happen with the Fed and stuff. Right, not a lot else going on around some of the other pairs. Dollar Mex, that one I was keeping an eye on. I fancied a little buy down into support. We never really got there. I know some of you folks, Gavin included, had a level around about this 1679 area, so a decent bounce there. Hopefully you made decent money out of that. Didn't quite get down to my order levels, my bids down here. It has run into trouble where I expected it to. Ideally, I would have liked to have been filled, and then, as I said, that's where I was expecting it to run back into trouble, up into this zone 1699, 1705. So we banged our head on there. So maybe setting up a bit of a range play now between there and these lows down here. So I'll be a bit more cautious if we fall from here quickly back down here to where my bids are. I'll be a bit more cautious because that was the sort of move I was looking to try and capture if I got filled. So if we come down there again pretty quickly, I'll be wondering why we're coming down there pretty quickly and whether I do want to get in that trade again. But as a level, it still looks pretty good as a support level down around there, 1670, 71. So I'm still keeping my bids in there and got an interest to trade down there. While we're looking at yen pairs, another one I'm keeping an eye on. I don't know if we're going to get there, but if we sort of stretched up there on the back of what's been going on in the Nikkei, and we'll see what happens overnight. Looking to maybe tap a little short up here in Aussie yen up into this double top that we've got up here. Maybe you can call it a triple top. I don't think we got quite as high as that in that last move. But again, just a technical trade, decent resistance. It's on the right side of the way I want to trade in at the moment, from the long side, running into obviously the BOJ and the spring wages and possibly ending easing. So yeah, bit of a technical trade if you ever look up there. Again, I'll see what's driving us up there. So there are some levels in play, and I think range trading is what we're looking at the moment. Another one to keep an eye on, and I'll bring Gregor in, is euro dollar doing absolutely nothing really. It's having a little mooch around, but going sideways. We do have big expiries, 109.70.80 over 4 billion rolling off today. The New York cut, 10 a.m. New York, 1500 GMT. We're not too far away. So if we're up around there, come expiry, have a look at what other dollar pairs are doing. If dollar is excessively weak or strong in some of the other pairs, but euro dollar is up, but that expiry and glued to it, then that can often mean that there might be a bit of a catch-up trade to be had afterwards, where the euro dollar will catch up with what other dollar pairs are doing. But that's something to watch for later. Right, Gregor, are you in?
Yeah, I'm here.
Here he is. Here he is. I'll assume you got some charts ready for us.
Yeah, sure. Of course.
Right, let me stop sharing, and then you can take it, mate. Right, so there you go. If you've got any questions or things you want Gregor to look at, then obviously pop it in the comments, and we'll have a look at that. You start with Bitcoin. Go on, tell me how you wave that mess overnight.
Yeah, I mean, this is as I said on Twitter, maybe they misscheduled the tweet here or something. I don't know. I mean, it's always easier to say we were hacked, you know. I don't know.
Yeah.
I mean, it's so strange everything what is going on. There were some also fake news already last week, and everything that it's so unclear of what is going on. This for me, it's not really supportive for this outcome, in my opinion.
Yeah.
I mean,
so that's a question I've got for you just quickly. You know, for the style of technical analysis you do, how do things like these spikes affect what you do? Because obviously it's a huge move we saw up and down last night, and you know, in most senses, when I use technical analysis, I would tend to ignore those sorts of things. I don't, you know, if it hits a fib, I won't say, oh yeah, that it hit a fib. I tend to ignore it. How does it affect your technical analysis? Do you ignore it as well, or does it become part of the price action?
I mean, if we see this kind of a very strong spikes, I definitely will try to focus more on a daily close price, because if the spikes occurs in the middle of the day and then you see prices completely reversing by the end of the day, then for me it's still the most important to see the closing price. If we are below that spike, or if we are turning back to the upside towards the US session, that is really going to make me more confident of whatever we were seeing, just a temporary spike to the upside, or are we really going to see a top formation. So for example, we had a pretty interesting spike, as we all know, on gold in December, right?
Yeah.
So that kind of a price activity, I mean, it really tells you that, like already Blake said yesterday on F.A.C.E, that you either stay aside, you are just sideways, definitely you don't need to be bearish, but clearly it's not kind of a bullish signal. You want to see something more impressive and stable to the upside whenever we see prices breaking to new highs.
Yeah,
So if
gotcha.
that's not the case, if we are just seeing a temporary moves, then you know that most likely plenty of stops were cleared out and that market is not ready to go in this kind of direction. And I'm afraid that something similar, could be happening on Bitcoin as well if we get more details as it planned today regarding this ETF. I mean, everyone was buying cryptos on these rumors that ETF could be approved. Obviously, a lot of futures traders were looking and profiting from this kind of moves here. So I'm afraid that no one will want to take a risk now ahead of this ETF event. So I think that if someone is long, it makes sense to take some money out of the market, because if something goes wrong, if it's not approved, then we can clearly be easily down 10-20% here, if not more, in some of the cryptos. So looking here at Bitcoin also from an Elliott wave perspective, we came out of this triangle here. And what is very important whenever we have a triangle, there is a bulls and bears fight in this tight range. And when you see prices breaking to the upside, that's when a lot of traders are now finally trying to catch the move, that because they think that we are going out of the range. And normally they're a little bit late to this game. Keep in mind that this is definitely a bit late of a trend if you look back from of the price action from start of October. So I think that this could be potentially moving into some serious resistance here, 48 to 50,000, definitely a very strong level. And then you have this ETF timing as well, which certainly, I would definitely not be buying it here. So I'm afraid that we will see some fake outs here potentially to the upside, but then even could see move to the downside. And I think that there can be still some interesting opportunities in cryptos on the upside, but I'm afraid that 42,000, 40,000 is the support that we could see at some point here in the next few weeks. Also, I'm looking here at the liquidation map of Bitcoin. Okay, so what is here? It's actually helps you to find the levels, which are very important because it shows you where are leveraged positions, where the liquidations could happen. So on this leveraged position, so it looks like the stop losses, and you can see here in yellow, it means that there are a lot of liquidations potentially if we see a move into that area. So at 42,000 here, I think that that's a massive support if we really are going to see this move to the downside here. So I think that this 40,000, 42,000 is very interesting potential support. Also here you have, which is very interesting, estimated leverage ratio. What this tells you is if traders who have leverage positions are confident with the current bullish trend. So we are seeing cryptocurrencies, Bitcoin breaking higher, but then you also see this ratio moving to the upside. So it looks like that those who are long and with leverage positions, they are confident that market will continue to the upside. So for me, that looks like over optimistic. Okay, especially ahead of ETF. So I think that it's just too much hype going on, and potentially this could be the opposite scenario here on Bitcoin. Okay, so that was for Bitcoin. Now, if we take a look, also maybe something that Ryan will love the most, probably not so much of a fan. I'm thinking that it's better that Cayman is not here as well, right? Whenever
Yeah, we'll
we
be
talk
ganging up on you.
about cryptos, he's not a big fan of it. Anyway, here on dollar, what we have, well, very nice 5 waves down. As I said yesterday in F.A.C.E, I think that this dollar weakness will resume. I think that we can break below 100, but these corrections could take a while before it will unfold. We'll see if inflation data will give us any kind of a potential breakouts here, but I'm afraid that we'll just be stay maybe in the range here, that especially if inflation data will not confirm what the non-farm payrolls report actually showed us on Friday. So whenever we will have these two looking for the same direction, that maybe Fed, yes, could really look for cuts, then maybe we could see more stable moves here on the dollar, either to the upside or to the downside. So I think that maybe, what are the expectations, 3.2 or something? I think that, whenever we see these figures about around 3%, or 3.2%, I don't really think that we'll see any kind of a massive move here on the dollar. So I think that this correction could continue further. ABC rally, potentially 104, 104.30 is the very nice resistance. So in the meantime, obviously, I'm looking for euro dollar that can see more weakness. Here I'm looking at the 4-hour time frame. So 107, 107.50 is very interesting support, I think, for a major uptrend resumption. I still think that last year, we completed here this corrective ABC decline at 104.50 around there, and that we could see much more upside while we are above that level. I certainly think that we will revisit this year these levels here from July of 2023. So I'm thinking that euro dollar can see much more upside. Also, ECB is much more leaning towards hawkish view compared to the Fed. So definitely this could keep euro in uptrend. Also looking at Aussie. Aussie is also, I think it could be setting up some very interesting bullish pattern here. We had this very nice, firstly, strong rise to the upside into the February of 2023 highs. Then a very deep ABC decline, which, by the way, did not breach a new low, but in fact, prices came higher and broke this trend line. So that's a very significant reversal, which confirms, because of this breakout, that this was indeed a corrective decline. So I would assume that something similar to the upside here, away from 62.70, could occur in very similar fashion compared to this first leg that we have seen here from October 2022 lows. So I'm looking for more upside, but 65, maybe 6,500, that's the ideal area that can be retested here, maybe in the still, who knows, by the end of January. Also looking at maybe at dollar yen. Now, dollar yen has a very nice potential ongoing bearish reversal here in process. We broke this trend line. It looks like an impulse. Now you're in corrective phase. I'm looking here at the 4-hour time frames. Okay, I see this broken trend line. So I think that correction can be deeper. So 147 is, for me, the ideal resistance from where I would be looking for more downside here this year. So as long as we are trading here below 2023 November highs, I think that dollar yen has a potentially very nice bearish setup. We also see, looking maybe at euro yen, some yen crosses has a very nice potential reversals ongoing as well. Here could be seeing potential even head and shoulder stop formation. So correction dollar yen obviously has an impact on those yen crosses as well. Euro is also doing quite well. So that's why we are seeing this one coming into higher levels. But if Bank of Japan would really change the policy, we know that even those crosses would come to the downside. So very nice resistance here is around 160. I would say, for potential completion of this wave B rally. Also, maybe it's worth to look on cable. I'm not sure what Ryan thoughts about cable, because I think everyone was waiting on GDP, which is on
Friday, I think.
Yeah, on Friday. So everyone, I mean, Bank of England is much more hawkish compared to maybe to investors who are just want to see what if GDP would really maybe confirm that maybe there is going to be some kind of a recession, if our economy is going to be in contraction. Then of course pound would come to the downside, and in such case I think that pound yen could really be very interesting. But if on the opposite side of that, if cable will stay strong by the end of the week after the UK GDP data, I think that this one could then see much more upside next week. So if we can stay here above 1 to 6 level by the end of the week, I think that this potential triangle formation could really play out, and we could see him push to the upside here towards 1 to 9 level. That is actually my target from an Elliott wave perspective. If cable would come to the downside and break 1 to 6 by the end of the week, and we close down here, then I'm afraid that we'll see deeper correction. Then I would be looking for 1 to 450, 1 to 5 level as a potential support. So that's my take.
Yeah, that's pretty much in line with my view. We're in a bit of a sideways range at the moment, and cable doesn't stay too tight for too long. So if it's all right to trade the range, but if we start breaking the range, like you say, down through 126, then we're probably going to see it stretch its legs a bit, and the same on the top side through 128.
Yeah. Okay. Okay, that's for me. So these are the main markets that I will normally pay attention on in the next few days. But I don't really believe that we will see any kind of a big moves ahead of the US CPI tomorrow. Even maybe their expectations, who knows, are too big for potential breakouts. Even after the data, we can still remain in this consolidation here on dollar, as I said, because on dollar index to the upside, I don't believe that correction is anywhere near completion. So this could keep things in range for longer than we think.
Yeah, I agree with that. And something we talked about in the chat room this morning, you know, when we get these big numbers, everyone's waiting for the US CPI. It's a big deal. We know it's a big deal, can be a big deal. But what happens if it's not a big deal? What happens if it comes in around expected? It doesn't change the needle for the Fed. Then everyone's going to be disappointed. Do we see a disappointment trade, or do you think we just stay in the same old ranges and everyone goes to sleep again?
Yeah, I just think that we will definitely here. Ranges will not be easily broken, in my opinion.
Yeah, I agree with that. Agree with that as well.
But it's very interesting to see that stocks, how far stocks rebounded now for the last 2 days or so. I mean, looking at S&P 500, it has a pretty nice, impressive run to the upside, but dollar is not really confirming this kind of move. So dollar weakness. So I'm not really sure if I would trust a stock market rally here. I'm not really convinced.
Yeah, I'm the same because we've got all those bank earnings starting on Friday.
Yeah,
I think the
this one
market's going
should
to be
be
a bit
big.
nervous ahead of those.
Yeah, this one should be quite huge. Yeah.
Yeah.
Okay.
Well, as I said, boys and girls, he's switched off. But if you've got anything else you want Gregor to have a look at, then just chuck it in the comments there. I'll take the screen back for the moment. Though I haven't got an awful lot to show you, boys and girls. There's that GDP we were talking about coming in on Friday. It's the monthly number. It's not a quarterly number or anything like that. But keep an eye on the rolling three-month change. That's effectively a quarterly rolling number. This is for November. We know things ticked up a little bit in November, particularly in retail sales. We're expecting month-to-month growth to be at 0.2%. So that may be about right. We may get something a little bit hotter. I think the emphasis would be that we get a beat more than a miss just sitting here now. And that will, at the very least, keep the pound supported. There's nothing out today apart from NBA data. So we're a bit light. Wholesale inventories later on in the US, nothing big there. So on the data front, we're a bit lacking today coming into the US session. So we'll have to see where we're going to get our inspiration from. Just back on the price front, obviously keep a close eye on euro sterling. Looked like it was having a bit of a breakdown yesterday, but once again we're back up again. So this one's still going a bit sideways. Take a quick look at gold, which it seems every time I look at gold, it's trading 20, 30 something. So again, still sideways action. Got to have a lot of patience at the moment for some of these markets because they're not really moving. Dollar CAD. Where's Ali? Is Ali in the house today? How'd you get on with dollar CAD? Ali? you would have got your target. Did you sit in some more, try and push it up to a move above 134? We could have grabbed a few more pips out of it. Let us know. What we did do in dollar CAD was hit the underside of this trend line that I've had on my chart from way back when, just this one here. Kept it on because even though we had a flush out, it then started coming back again, as you can see at various points. And it did, in fact, mark the top yesterday pretty much on the dot, back below 134 again. So this 134 level, you've got to look at it now that we've had this failure. You've got to look at it as a break point. It needs to break and hold. Once you see that, then you've got some conviction to take along. If you're not long already, if you're flat, start to see it hold above 134. That's your, as I say, that's your indication to maybe try along. Then you might get a push up to the next zone. But I assume you took your profit in that one, Ali. But yeah, it's back in the box and waiting to see what it does next. Dollar China still looking a bit on the bullish side, as I'm expecting, even with the noises from China. The market's solely focused on the data over there, and stock market slumping isn't helping this one at all. I think I'm going to have a little bit of a assessment if we get above 720s and start holding above this area here. Then I might think about my shorts, maybe take a bit more off the table, just reduce the position, just in case we're going to start edging back up towards these highs. But as I said yesterday, I understand the reason why. I know fundamentally I'm on the wrong side. It's really only the PBOC and officials standing in the way of letting this one shoot up too high while I'm staying in the trade. But I understand the fundamentals are against me, so I'll be watching the price levels that will decide whether I stay in the trade or not. Right, I think that'll be it for me today. And thank you very much, Gregor, for all your valued input and your charts and whatnot. Hopefully, we'll see you soon. I'll get you back on the show, no doubt, another point. Or we'll see you popping up on Face. And obviously, if you're in the platform, you can see all of Gregor's wonderful stuff on the ForexAnalytix platform. He updates our dashboard there regularly and also on the social medias. Have a great day, everybody. Hope you make some decent pips, and we'll get ready for CPI day tomorrow. Thank you very much. Have a good one.